Hello and welcome to the Business Standard Morning Show. I'm Vinu Sandhu. Let's take a look at the stories for the day. The rise of cryptocurrency has unsettled the government as also the central bank, which feared losing control over monetary supply. Even as it was putting together a legislation to tame the elephant in the room, the government announced two quick measures in the recent budget, which experts believe are meant to check the rise of private digital currencies. Apart from taxing cryptos heavily, the government has announced the RBI's digital currency, a crypto competitor which it can control. Our next report tells us about the digital rupee and how it might give a fillip to the fintech sector.
Prime Minister Narendra Modi on Wednesday said that India's central bank digital currency or CBDC will revolutionize the fintech sector by creating new opportunities and lessen the burden in handling, printing and logistics management of cash, apart from making digital payments and online transfer of funds more secure. A day after announcing the launch of digital rupee in the Union Budget, Finance Minister Nirmala Sitharaman told a press conference that a currency is a currency only when it is issued by the central bank, even if it is a crypto. Anything outside of that, loosely we refer to them as cryptocurrencies, are not currencies. RBI Governor Shaktikanta Das has already shared his strong views against private digital currencies, which is decentralized and can be issued by anyone. In her budget speech, Finance Minister said that the digital rupee will be launched using blockchain and other technologies. But a financial daily, quoting some senior officials, said that the RBI may consider other centralized technology models apart from blockchain to host its proposed digital currency. So the exact regulations governing India's digital currency are yet to be finalized. But before looking at the possible use cases of a CBDC, let us understand how it works. While the government treats private cryptocurrencies as an asset, a CBDC is a legal tender issued by a central bank in a digital form. Issued by the RBI, it will be fungible with physical currency. It is sovereign currency in an electronic form and would appear as a liability on the central bank's balance sheet, just like the banknotes in circulation. The two major categories of CBDCs are wholesale and retail. Wholesale CBDC is designed for use among financial intermediaries, such as between the central bank and commercial banks, while retail CBDC is meant for the general public. This type of digital currency can be based on blockchain or distributed ledger technology that can validate transactions. China's central bank currency, the digital yuan, for example, does not use blockchain. Retail CBDC can be issued directly by the RBI to the public or through commercial banks. Economic Affairs Secretary Ajay Seth has said that the RBI would be issuing both wholesale and retail digital rupee. He also raised the possibility of deploying smart contracts using CBDC. Smart contracts are programs on blockchain that automatically execute decisions when predetermined conditions are met. Mihir Gandhi of PwC India lists out some possible use cases of CBDC in the Indian context.
Current subsidy payments that happen to the citizens and also for specific use cases where money needs to be provided to the citizens, say, for example, the e-rupee, which recently happened, which was a prepaid voucher for availing the COVID vaccine. All of those use cases can potentially happen through the digital rupee. What it means is that the money will directly be credited to the account of the beneficiary and there will not be any need for any prepaid voucher or a card. The other use case is on the remittances. So both for international remittances and domestic remittances, we can actually envisage the use of digital rupee for instant movement of funds. Last use case, which we are currently hoping can evolve, is on the lending side, where if I need to give funds to MSME or to SMEs or even to individuals, then that can be facilitated through digital rupee instantly once the paperwork and the credit approvals are received.
In a speech last year, RBI Deputy Governor T. Ravishankar listed out the advantages that CBDCs have over other digital payment systems. He said that payments using CBDCs are final and thus reduce settlement risk in the financial system. The need for interbank settlement is eliminated if digital rupee is transacted on a UPI-like system, Shankar added. CBDCs would also potentially enable a more cost-effective globalization of payment systems. An Indian importer could pay an American exporter on a real-time basis without the need for an intermediary. The time zone difference would no longer matter in currency settlements. Shishir Mankad of Praxis Global Alliance told us how a CBDC would help India's financial services and fintech spaces.
Yeah, I think the answer to this lies in thinking through what use cases a digital currency based on blockchain can solve that a standard fiat currency cannot. If you have use cases in mind, then it certainly makes sense, and I think that's where the real answer lies. If you're giving, let's say, consumption subsidies, uh, then you can say that you need to consume this in certain time, otherwise it will lapse. Right? They tried this in China, incidentally. This was something that they tried in China in the digital yuan. Example could be if you are giving a loan and you want to make sure that the end use is monitored. If you just disburse a loan in the account of a customer, you really can't monitor end use. But here you can monitor end use by saying that only for certain purposes the currency will be honored. Another example could be if you want to experiment with, let's say, capital account convertibility. You can carve out a certain supply and say, this is convertible capital account. Your downside is limited because there's only so much supply. Second question, how this makes sense for fintech. I think many of the use cases I mentioned are very classical fintech cases, right? So people will build apps around this. People will build SaaS models around this. And then the banks will need some applications to manage these. These could perhaps be provided by fintechs as SaaS. So yeah, interesting opportunities up there.
90 countries, representing 90% of the global GDP, are currently exploring digital currencies. Of these, 16 countries are now in the pilot stage, while 9 countries have launched a digital currency. India will soon join this small group of countries with a digital currency.
Business Standard reporters caught up with members of Finance Minister Nirmala Sitharaman's team to understand the union budget better.
So what is going to be the government's priority for divestments in the current fiscal year?
In the current fiscal year, we have the biggest priority of LIC IPO, which is going to be the largest in the history of Indian stock market, and also one of the largest in the world. And we also will carry on with the completion formalities of the NINL and closing formalities, plus the carrying on of other the transactions like BEML and SCI and BPCL, and carrying forward those things to the logical culmination, and hopefully we will proceed well there. Then some expression of interest, new expression of interest might come, and some of the expression of interest that we have launched, we might get bidders, and we can start with the second stage process.
And what's going to be the priority for next year? You have a conservative target of 65,000 crore for the next year. What are you looking to divest and privatize, and what's going to be the priority for next year?
Now, first of all, on target, I would say that it is the rationalization exercise that we have done, keeping in mind that this target is in accounting terms. Many of the receipts do not come to the government, even though the transactions get concluded. So keeping a very high accounting target has a problem. So, because many cases we get, for example, in Numaligarh, we did this thing, but it came to us in the form of dividend, which is shown as a dividend and not in the disinvestment receipts, though indirectly it is a disinvestment receipts. So I think we are fairly, bringing it clear terms with the fiscal. So it's a rationalization of the target, and it should also be commensurate with our philosophy that we should do the divestment in the market, particularly minority stake sale at the right time and an opportune time. And privatization transactions are essentially time taking, and we should be able to conclude them. And after 20 years, that the process which we have begun of privatization Two of the transaction getting closed in this financial year, maybe more. So this will also be carried on. So it will be like a pipeline approach for us.
Information technology or IT stocks have been on a downward spiral in 2022. The Nifty IT index has slipped over 7% year to date and has been the worst hit amongst its peers on the NSE. In comparison, the Nifty 50 index has moved up over 2% during this period. So what is ailing the sector and why is it out of flavor on the Lal Street? Let's find out.
Nasdaq-listed IT services company Cognizant will be onboarding 50,000 freshers from India in calendar year 2022, up from 33,000 freshers in calendar year 2021. Back home, TCS has added 77,000 freshers in the first 9 months of FY 2022, while Infosys has revised the total fresher hiring target for FY 2022 to 55,000 from earlier 45,000. Accenture too has done net addition record of 105,000 employees in the first half of CY21. The street, however, isn't liking such massive hiring numbers as these are weighing in on the company's financials at a time when growth rates are moderating. On a year-to-date basis, the Nifty IT index has slipped over 7% on the NSE, underperforming the benchmark Nifty 50 index that has moved up 2% during this period. We spoke to G. Chokalingam, founder and chief investment officer at Economics Research, to understand what's slowing down the momentum in the IT industry.
Attrition and rise in the employee cost. If you're talking about a large IT companies, it is basically the rising employee cost, that is because of the attrition. Now, if you look at the TCS, it spends as much as even 70% of the money on employee, whereas HCL and all, they spend much less. So, second, there is a poor year-on-year revenue growth. If a growth story remains intact in double digit, the attrition and the rising employee cost will not be a cause of worry.
Okay.
So this is happening when, in dollar term, the year-on-year growth is in poor single digit for many. So,
okay.
So therefore, the underperformance of some of these large IT stocks like HCL and all likely to continue.
Analysts at Prabhudas Leeladhar expect employee costs for IT firms in the coverage universe to increase by 645 billion per year by FY22, 548 billion per year by FY23, and 569 billion per year by FY24, which is roughly 2 times of the last 6-year average. Apart from the domestic headwinds, the recent global tech rout has also eroded the market value of IT stocks. Tech-heavy Nasdaq, for instance, has lost nearly 8% thus far in CY22. Fangman stocks or Facebook, Apple, Nvidia, Google, Microsoft, Amazon and Netflix are down 10 to 30% in the past 1 month. Analysts believe the concerns on the monetary policy tightening in the months ahead are weighing heavily on tech companies that are yet to show revenue and profit growth. But should one invest in IT companies at current levels or stay on the sidelines? Chokalingam believes the mid-cap IT companies still hold promise and investors can use the fall in these stocks to accumulate from a medium to long-term horizon.
The opportunities are there in the mid-sized IT companies.
Okay.
And one can look at even TCS because it is able to manage attrition very well. Otherwise, so like we are bullish on, the Cyient, so some of, the TCS, whereas we recently gave sell call on HCL.
We also have with us Business Standard's Avdut Bhatkar to give more insights on the stocks as per tech charts.
Nifty IT did violate the major support of 33,900 but could not add follow-up selling pressure. Rather, it failed to build up the negative sentiment. The current scenario wherein we have seen a consecutive 4 green close, this index can easily jump to 37,500, which is going to be a 5% upside. Among IT stocks, Infi, TCS, Tech Mahindra and HCL Tech can easily jump 10%. Majorly Infi, which is likely to jump up to 19%, is holding the most crucial support, which is of last 4 months, and it can easily jump 2100, an easy jump of 19%. Stock like Tech Mahindra is on the similar parameters wherein it is respecting and honoring the most crucial accumulation range of 1400 to 1300, which it has witnessed in October last year, and it can see a jump towards 1700, an easy jump of 15%. Other stocks like HCL Tech, TCS can see a jump of 10%, as we can clearly see a reversal in trend for IT stocks.
The Nifty IT index underperformed on the bourses yesterday, falling 2%. In comparison, the BSE Sensex and the Nifty 50 closed 1.3% down at 58,788 and 17,560 respectively. Against this backdrop, the performance of IT stocks will be on investor radar today. That apart, December quarter results of 114 companies, including Bank of India, Interglobe Aviation, Paytm and Tata Steel will also guide the markets. Meanwhile, in the primary markets, Manyavar brand owner Vedant Fashions will open its initial public offer today. The company plans to raise up to 3,150 crore rupees in the price band of 824 to 866 rupees per share. Brokerage recommendations vary from neutral to subscribe with caution, as current positives are captured in the valuations commanded by the company.
A day after the budget, Union Finance Secretary TV Somanathan told a business news channel that the government doesn't treat trading in crypto assets as illegal. Cryptos will be treated the same way as betting on horse racing or any other speculative transaction. Our next report tells us more about cryptocurrency, how it works, and the challenges it is posing for the government.
Simply put, a cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it very difficult to counterfeit or double spend. Further, for most cryptocurrencies like Bitcoin and Ethereum, each transaction is stored on a digital ledger called blockchain, which is distributed and decentralized. Here is how that works. A blockchain, as the name suggests, is a chain of blocks, with each block containing information about a cryptocurrency transaction. Now, this blockchain ledger is being managed by several nodes, which are computers situated around the world. Hence, it is called a distributed ledger. So, if someone wants to hack into the blockchain ledger and shift things around, they would have to hack into all the computers or nodes managing the blockchain. That obviously would be very difficult. And that brings us to the next most important feature of cryptocurrencies, their decentralization. Let's understand what this means through a comparison. The money that we exchange in the form of paper currency, or the money that you see in your Google Pay or PhonePe wallet, is issued and regulated by the Reserve Bank of India. The RBI can, on its own, decide to print more currency or pull some currency notes out of circulation. But in the case of cryptocurrencies like Bitcoin, there is no single authority that creates new coins or regulates Bitcoin. It has its pros and cons. The good part is that cryptocurrencies can really democratize finance and facilitate quicker cross-border payments for minimal cost, among several other benefits. The bad part is that since there is no central authority overseeing these transactions, criminals often use it for nefarious purposes. Crypto is the preferred mode of payment on the dark web for everything ranging from child porn to hacked data. That is why governments around the world shy away from legalizing cryptocurrencies as a form of payment. But that has meant that cryptocurrencies have found another use case as an investment instrument. Their very volatile prices make them high-risk, high-reward investments. Consider this: in April 2021, Bitcoin touched an all-time high of $65,000, registering a massive 450% spike in just 6 months. However, soon after, it witnessed a massive fall and lost more than half its value, stabilizing at around $30,000. Finally, let's talk about how cryptocurrencies like Bitcoin are made. Continuing with the Bitcoin example, remember that Bitcoin and other cryptocurrencies don't exist in any physical form. They exist only virtually. So each Bitcoin transaction has to be validated and then entered into the public digital ledger of all Bitcoin transactions. The validation To put it simply, means checking that the bitcoins being transferred are real. But this validation is performed by high-powered computers solving complex computational mathematical problems. The computer that manages to solve the problem not only validates the Bitcoin transaction, but is also rewarded with 6.25 Bitcoins. This acts as an incentive for miners to continue making the Bitcoin system work. And this process of validating Bitcoin transactions and thereby adding new Bitcoins to the blockchain is called mining.
In the first such case, the Pune police on Wednesday arrested a constable and his 6 accomplices for allegedly kidnapping a trader and demanding a Bitcoin ransom worth $40 million. That's all for today. For more news and analysis, please log into our website www.business-standard.com. We too will be back tomorrow morning with more. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.